Hello and good morning. You're watching News9. I'm Shweta. We're bringing you stories from the world of business, policy and economy. We'll begin with markets this Friday morning. Sitting to my left is my colleague Krishnakumar. Krishna, good morning.
Very good morning, Shweta.
Let's begin with markets this morning.
It's a lovely start for the markets this morning. Sentiment improving on Dalal Street, Shweta, and hence both the Sensex and the Nifty opening in the green. If you can pull up the charts over there, we have to bear in mind that in the same time, last morning, you had Nifty and Sensex opening in the red as well.
All right. So I want to come to you, Nifty, Sensex. Let's quickly go to first Amit. Let's get in Amit. Yes. I'll come back to you, Krishna. Sorry for that disruption. Amit, market opening in the red this morning.
Yeah, good morning, everyone. The sentiment is quite positive ahead of G20 also. Plus, the inflows continue to be there from the retail side and the domestic institutions. The IPO, are receiving fair share of liquidity, both in the main board and the SME space. The economic activity seems to be, getting realized in terms of the earnings beats and earning upgrade after a sort of a lull for almost, 3 to 4 quarters. Markets looking good in the short term, though there are pockets where, the markets are quite overheated and overextended.
All right, let's go back to Krishna. Krishna, we can hear you, I believe, now loud and clear.
Yes, and we can hear Amit loud and clear. Straight from the horse's mouth. Amit's talking about positive sentiment in the market this morning. Amit, a very good morning. I was just taking people through the Sensex and the Nifty and the mid cap and small cap this morning, and was just talking about the fact that the opening, at least, Shweta, it's a positive opening for the stock markets. Bear in mind, stock markets have been in a range-bound way, trading not too much gains, not much moving the markets. So as far as Friday morning is concerned, it's fantastic to see that Nifty, Sensex, mid-cap, small cap, everything, it's all up in the green. Small cap index up more than 0.5%, mid-cap up nearly 0.5%, and Nifty and Sensex firmly in the green as far as opening trades are concerned. And let's then take from the broader markets to the stocks in action that we are talking about. There are tons of stocks in action. We'll begin with ONGC quickly. ONGC up nearly 1%, and that's because of a fresh 15,000 crore rupee fund infusion that is set to witness as part of a restructuring. And that fund infusion will result, Shweta, in Gail, Gas Authority of India Limited, being put out of a stake in Opal, where ONGC holds a near 49.36% stake in Opal. Gail has 49.2%. Gujarat State Petrochemical Corp has the remaining 1.43%. But this restructuring will mean that Gail will go out and ONGC will have to infuse 15,000 crore rupees of fresh funding into Opal, and hence markets appreciating the move. Gail stock too up as a result of that piece of news. That's why you're seeing both ONGC and Gail up nearly 1%. As far as Reliance and TV18 is concerned, Viacom 18, a subsidiary fully owned by Reliance, has picked up rights for the next 2 seasons of ISL, India Super League, the football, a tournament, and because of that, you're seeing movement in both the Network 18 stock, the TV 18 stock, as well as Reliance stock. Bear in mind, these rights were with Disney Hotstar for the last 9 seasons, so it's a big decision. It's moving away. ISL moving out from Disney Star to Viacom 18, both digital rights and broadcast rights. Clearly auguring well as far as the stock is concerned. That's why you're seeing Reliance and TV18 up. Nazara Tech, bear in mind, has raised 500 crore rupees in the last 4 days. 100 crore rupees from Zerodha for a 3.5% stake, and more than 400 crore rupees from SBI Mutual Fund, which has picked up a 10% stake. So 500 crore rupees plus worth of funding in 4 days as far as Nazara is concerned. So clearly investors cheering that move, stock up nearly 1.5%. And funnily enough, a related other gaming stock, you have Nazara Tech, which is another related gaming stock that we're talking about, also up nearly 3.5%. So gaming space, after all that bad news on online gaming and GST and online gaming, fresh investor interest moving the gaming stocks over there. Also, apart from all of this, the first stock in action, Shweta, was LIC. SEBI disposing of adjudication proceedings against LIC. That piece of news bringing relief to LIC investors, and that is moving the LIC stock up in trade this morning, Shweta. There are tons more, but these are the first stocks that I can come at the top of my mind as far as the big stocks in action are concerned. Bear in mind, look at these stocks, and I would love to get Amit's view on them, Shweta. Mazgaon Dock stock up nearly 10%. Cochin Shipyard stock up over 8.5%. Havells India up 3.5%. Some of these stocks are moving, especially Mazgaon Dock and Cochin Shipyard. Amit, we have if we have Amit online, then we can talk to him and ask him. Of course, Shweta will ask him. But I'd be curious to know how come some of these stocks are hitting their 52-week highs, and they are at near 10% and 9% up. Amit, Mazgaon Dock, Cochin Shipyard, two stocks I wanted to quickly check with you about. Mazgaon Dock up nearly 9.8%, nearly 10%. Cochin Shipyard up nearly 9%. What's moving these stocks?
So basically, they are, sort of, I would say, overextending themselves at this point of time. They are quite disassociated with the fundamentals. But what is happening is they are getting very good orders from the government, and there is an anticipation that even in the G20 meeting, there could be some memorandum of understanding signed in the shipping industries with certain countries. So I think that's moving the stocks. Obviously, these stocks were sort of untouchables 12 to 18 months ago. So quite under-owned, stocks, despite very available, very cheap, and even around the book value. So now we have seen a rush into these stocks, whether it's Mazgaon Dock or Cochin Shipyard. Both have seen a very strong rallies, but I think now they've reached a kind of a valuation which cannot be justified with the current order book, at least for the next 2 to 3 years. I mean, we are now extending from like FY26 earnings to even further 27 and 28 earnings. And my experience is when these kind of stocks, despite having good fundamentals and good order books, if they've extended so much, then there is going to be some sort of a time and price correction in these stocks at some point of time when the sentiment reverses for the market.
All right, another stock that continues to rally, in fact, since Wednesday, LIC. LIC rallied 4% on Wednesday, has in fact picked up some more momentum this morning. All of that on the back of the news that there is some relief there as far as SEBI is concerned. What's your view on the LIC stock?
I haven't seen the SEBI order, how much is the, impact in terms of financials. But in general, I think the life insurance space is quite competitive. LIC has been losing market share over the past few years. And now since the listing, also the stock hasn't run, too much. So my sense is that in the short term, this being a very competitive space, we have almost 24 players. This market would see some sort of consolidation. Obviously, there are a lot of things which can pull the trigger for insurance companies. Like you can have 100% FDI coming in. There are a lot of clauses which the IDA is already working on, which can also be beneficial to these companies. But as of now, I think after having sort of 2-3 years very harsh because of COVID on their financials, they are sort of recovering. LIC may not be able to compete against other private life insurers, given their offline presence more than online.
But do they really have to compete, Amit, at this point? Do they really have to compete? The question is, given their offline presence and massive presence at that, do they really have to compete, given their market cap?
See, one needs to understand that, till 2003, there was no competition. Only LIC was there. Now, everyone who has sort of, bought a policy of 10, 15, 20 years, those policies are expiring. So now, with all the online blades, a lot of platforms have come up where we can, where you can go and buy an online without the intervention of an agent. So my sense is over the next few years, we are going to see a shift from LIC to other private insurers who are offering better products. It's not that, LIC is going to go away at any point of time, but my sense is over the next 10 years, LIC would keep on losing the market share as compared to other private insurers.
All right.
Especially also because you have the likes of Geo Financial Services set to enter the insurance space. At least that's what we understand, Amit. So I'm guessing you're factoring that in when it comes to LIC losing market share.
Yes, Reliance has also made a point in the AGM that they will be entering, insurance space, and they will be doing it purely digital to start with. So I think the competition in this space is going to be harsh. I mean, competition is going to be stiff, and I'm not 100% sure that how LIC is going to compete with that competition,
Okay.
given the public dynamics attached to the company.
All right, let's also quickly touch on oil and gas stocks. ONGC and Gail up. There are, domestic cues, but there are also global cues. Globally, Brent crude at $90 a barrel. Domestically, ONGC set to infuse 15,000 crore rupees in petro, literally buying out Gail at this point. All of that is auguring positive. Gail was down, in fact, in the last couple of trading sessions, mainly on the back of the fact that it's going to get more and more expensive for gas production. Oil imports will be impacting India, as well as, all oil and gas stocks for that matter. What's your view of the sector?
I think the recent, announcements by Saudi in production cuts, we might see even a further movement in crude above $90. Brent going above $90, so it could even touch, I would say, $95 to $100. So in short term, that is going to be sort of beneficial for the companies, but I mean, as an investor, I would always look at how much money they can make when the crude rises, and the answer is actually no, because of the way crude prices are not allowed to move as per the international prices, and government sort of regulates it indirectly.
Right. So will it be
As far as
beneficial for companies, Amit? At least my view is, and please correct me if I'm wrong, there is unlikely to be any passing on of higher prices or higher rates of crude to people in India. Multiple factors. Even though our prices are changed on a daily basis, they are unlikely to change. That's the view. In fact, that's come in from a lot of experts that we have spoken to in the last couple of days, which essentially means that all OMCs will have to bear the brunt of it.
Yes, that tends to happen. In fact, I don't think the prices are changing daily since past few months. So the issue here is, again, we have a big election season coming up. First, we have 5 state elections and then the general elections. In such a scenario, obviously if the international crude prices go up, let's say $100 or even more, then we are not going to see a similar kind of movement here. Already we have seen that a lot of the states haven't really cut even the VAT, which was cut by the major government last year. So a lot of non-BJP governments haven't cut it. So my sense is, all these oil and gas companies have to bear the brunt. And in fact, if the prices go up, they even put on the duty extras to earn more money out of it. So it's going to be not so difficult. I mean, not so easy to actually make money out of it. There could be trading opportunities, but I don't think there is a sort of an investment opportunity into this.
Right. Just one off question on the entire oil and gas space. The days of cheap Russian oil are over clearly. And you have other issues. With Brent going up as well. But there's a good chance that all of that could mean augur well for the pure gas stocks and not necessarily the oil stocks. Would you agree with that kind of an assessment? Because gas would then become the next source of energy that's affordable.
Yeah, over a long run, that's going to happen. Again, they have got into a sort of a consultation paper where by 2026 we are going to fix the cost price, and then it's going to move. But in India, you don't know whether how is that going to be implemented in the next couple of years. Obviously, the attempt is to move towards gas and less of oil imports. And there is a lot of capex which is happening in the gas space currently, but it's more of a developing kind of a situation at this point of time. How much the companies will be allowed to make a profit out of it.
All right, let's quickly move on to gaming stocks. Gaming stocks that we sort of and are guilty of underwriting.
Yeah.
And underwriting on the back of the GST that was implemented.
Yes.
A lot of people said it's the death of online gaming platforms in India, death to online gaming platforms in India, casinos, horse racing, etc., etc. That hasn't come through. That hasn't come up. In fact, Nazara Tech, there is a value proposition that Zerodha has seen, and now SBI has invested over 400 crore rupees.
Yeah, and that in a sense is a contra call considering the scheme of things. If because if you thought that with that kind of a GST, 28% almost, it was going to be like, how are these companies ever going to make profits? And then they're spending so much money on promotion and advertising and brand ambassadors, and the costs are only shooting through the roof if you want to be an online video gaming platform and get across to as many people as you can. But what this does is essentially turn things, turn the table, so to speak, as far as online gaming companies are concerned. It's not one or two, it's 500 plus crore rupees within a span of 4 days. First, it was around 100 crore rupees by Zerodha for a 3.5% stake. The names also matter here.
Right.
The companies that have invested in online gaming, a company like Zerodha, which is known for having a solid fundamental business model in a sea of startups which don't have profitable business models. Zerodha is a standout. So which means that when it comes to the business of investing money, you can't doubt Zerodha's calls. So the name tag that comes along with the 100 crore rupees is more important for online gaming, if you ask me, than the 100 crore rupees. And then comes something like SBI MF, largest bank in the country's mutual fund house, investing over 400 crore rupees, 410 crore rupees in Nazara. So all these point to the fact that maybe there is light at the end. There is light at the end of the tunnel as far as online gaming companies are concerned. And to the point where all the joy in Nazara seems to be rubbing off on Nazara Tech as well. So I'm thinking this is a voice in support of online gaming business in India, Shweta.
All right, online gaming business not going away anytime soon. What's your view on the online gaming industry? The stocks are up this morning, Amit.
As far as the real money gaming companies are concerned, I think the 28% GST was a death knell for them. So we've already seen a lot of companies shrinking their operations, cutting out operations. There are a lot of job losses also. A lot of people have been laid off. I think that is going to continue. There could be some opposition, like I think Karnataka yesterday has said that they have put off the decision for some time. So there could be some dilly-dallying happening on the final implementation of the 28% GST. But as far as I'm concerned, if the 28% GST is there on the real money gaming segment, then that is as good as dead as of now. As far as Nazara is concerned, I think given their business model, they are quite diversified, and less than 3% of their revenues actually comes from the real money gaming segment. Now, what is interesting is that Zerodha was quite invested in Delta Corp, a listed entity which has been, bear the brunt of this 28% GST because they have big casino operations. Their subsidiary Delta Tech Gaming was about to go for an IPO in October. So I think that whole thing got impacted, and Zerodha has actually sold their stake in Delta Corp last week on the exchanges to a block deal. And I see move towards Nazara Tech as sort of extension of selling their stake in Delta Corp, even though Zerodha has not directly invested. It is, I think, through Nikhil Kamath's office. But yeah, I see that shift happening from a company where which is impacted by 28% GST to a company which is not impacted by 28% GST. Obviously, SBI Mutual Fund is a big, vote of confidence for Nazara Tech, almost 10% stake into it. There are some, legacy investors like Rakesh Jhunjhunwala office also invested into Nazara Tech. So I think things are looking good for the Nazara Tech as a company.
Okay.
Just a quick question,
They-
if I were to ask you,
Yeah.
is all the action in Nazara the reason why you're seeing Zensar up as well? Is it, is that then we are, interpreting it right that it is a vote of confidence for the online gaming industry and online gaming
And-
stocks consequently?
Is it a vote of confidence?
Yeah, is it?
Or are we reading too much into it?
Yeah, exactly.
As
I want
you
to
said-
ask that exactly.
As you said, only 3% of Nazara's overall business revenue comes from online gaming. So are we reading too much into this news?
No, I think the correlation is not really correct. It is more of a social media noise. Zensar Tech does not, have a very strong revenues coming from the RMG segment, the real money gaming segment. So I think it's more of a causation which a lot of investors are drawing, just reading news across the social media. You actually study the balance sheet, the impact is very less. Zensar Tech has a management change in the last 18 months or so. Their products are doing well. They were less impacted by all the international slowdown because the geographies they were working on, they have seemed to have stabilized and doing well. In fact, if you look at all the mid-cap IT companies, not just Zensar Tech, even First Source Solutions, or Cyient DLM, they are doing well. A lot of these are companies that are also getting projects from the defense and the
But
railway
Amit,
space.
mid-cap IT
Yeah.
as a space in general has been doing well considering how the large cap and blue chip IT has been under pressure in the recent past, don't you think?
Yeah, so I consider them to be separate segments. I mean, obviously, the IT services segment, your Infosys, HCL, TCS, etc., fall into the services bracket. And what we have seen is that, in general, commentary from these IT companies have not changed much since the first quarter results were out in July, August. And there is not much sign of a turnaround at the ground level for the large cap IT services company. However, the situation is not getting worse, and with the expectations of a possible improving macro environment and probably interest rates coming down, the tech spending with these enterprises should also bounce back sometime next year
Okay.
when the budgets are refreshed. So I think on the longer term, the growth rate could be again get back to pre-COVID levels for the IT services company. But at this point of time, the more AI tech based companies, the product companies are doing well as compared to the large caps.
All right. All right. One other thing I want to ask you this morning, Amit, is that you've got there is news trigger for this as far as the TV18 stock is concerned, and that is the fact that Viacom 18 has backed the rights for ISL for the next 2 years, and after 9 years of being with Disney Star, Viacom 18 managing to snag to snatch the rights away from them. Talk to us. Reliance stock also trading up in the green because it is, after all, Viacom 18 is a wholly owned subsidiary of Reliance. Are we again reading too much into it? Is the markets, in fact, reading that as a boost for a Reliance stock, or because TV18 stock is up nearly 2.5%? And there's a clear correlation over there. But, is there anything to do with Reliance?
And a lot of volatility of late in the TV18 stock as well. So if you could perhaps explain to us what's happening there.
So the TV18 is just constitutes the TV part of it, but the Network 18 company also have the other digital ventures like Book My Show and Forbes and a couple of other magazines, online magazines also. So a Network 18 is more of a play on all these parameters. Obviously, Viacom has got a lot of sports deals now. The bigger ones being the IPL, and very recently they've also got India domestic cricket season for the next 5 years. They also have South African T20 and South African international cricket as well. Now they have got this Indian Super League football matches as well for the next 2 seasons. So I think the whole basket for Viacom or I would say Geo Cinema that is getting better and better. I think the question still in the mind of a lot of investors is how they are going to monetize this. Because right now, a lot of these things are available for free, and only the HBO portion is, at 999 per year. So I think that the volatility got more to do because investors are excited by what JioCinema is bringing to the table. But because there is no concrete plan of monetizing them, the stocks are not really, running away as such. So I think overall the basket which Viacom or JioCinema has created, that is quite impressive. It again shows a lot of consolidation is happening in the media sector as far as the available gaming, media is concerned. So we have to sort of wait and watch how they are eventually going to monetize it. My sense is, come the next year IPL, there would be some sort of money which we have to pay to watch it, and not going to be free like it was this year.
All right, Network 18 stock also up by 2.47% this morning. TV 18 stock up by 2.37%. That's the latest coming in. Stocks in action on your screen at this point in time. And those are the stocks we continue to track here on News9. Amit Gupta, thanks very much for joining this morning, sir.
Thank you, Amit. Lovely
very
having
much
you as
for
always.
your inputs.
Thank you.